All right, stock started the day, or the week, excuse me, off with a little bit of a weakness here. Again, we've had some weakness last week too at the end of the week, but of course, like right now that we're through all the other data, the CPI data, the Fed minutes, and Jackson Hole speech, and everything that's behind us now. The one thing that's ahead of us is the Nvidia report, right? That's the big thing this week. Next week it will be the jobs number. The week after that will be the CPI. So there's always going to be something heading into what's widely expected, because the week after that is going to be the Fed meeting. So we got something every week. This week's the big one. Nvidia is widely expected to continue to push the market higher after its earnings. That's kind of the precedent, except for this time of year. But until we see something different, right now the momentum is to the upside, both for Nvidia and the markets. Even if the last few days there's been a little bit of weakness in those mega cap names. So we'll break down just how much weakness there is and how impactful that will be on the trend of the market, whether or not we are actually shifting and actually broadening in the rally, or what why does it at least look like we're broadening to the point where you have some talking heads on TV talking about that. So we'll talk about the broadening trade. We'll also take a look at again, some of the technical indicators that we've been wanting to get to kind of clear some bullish thresholds and are not quite there yet. And now it's, we're definitely not quite there yet because of the weakness we've seen. But we'll talk about how these patterns, at least they're not turning bearish. They're still holding up and as I've mentioned before, may just turn into a convergence period where we don't consolidate, that we just converge into a new move to the upside. I mean, that can very well be likely with the news that's coming out this week. So we'll break all that down. Our trade idea stock that's also looking pretty good, bullish move, similar to a lot of trades we've been doing here for the past few weeks. That's just the kind of patterns you see right now. Those trades are moving to the upside, so we take advantage. So we'll do another one today. So let's go ahead and get started. Today is Monday, August the 26th, 2024. This is the Market Outlook from MarketScholars.com. My name is David Settle. Before we get going too far, I invite you to subscribe to our YouTube channel with this icon here, the red subscribe button down below. Click the thumbs up icon to like our video. Comment on anything that stood out to you today. Join our website at MarketScholars.com for free. Follow me on Twitter for more content between the videos. And join our Market Outlook Facebook group that we've created. If you're watching us on our blog, check out some of these other things over here on the right, including our Market Outlook live video. So I review old trades, see whether we should stay in them, get out of them or not, or get out of them. We also put on today's trade already before the market closed during that class. Come down to the bottom, click this heart. It opens up this tab. Hit that like button there. Same thing here. Click the thumbs up icon. It opens up this tab. Hit that like button there. Again, the more you do that, it helps get our content out to all of our followers on those platforms. So thank you to those who do that day in and day out. Those who don't, you can do it right now while you're watching with one or two really easy clicks. All right, let's start off taking a look at the S&P 500 with the market forecast indicator. You can see we had a little bit of a down day. It's actually a third down day in the last 5 trading sessions, though despite that, we're actually up. We've gone from 56.08 to now 56.16. So despite being down 3 out of 5 days, we're up 16 points, which is why, of course, we're still strongly bullish on the intermediate posture. And the near-term line dropped below the chart's midpoint with an oversold momentum line. So the intermediate confirmation signal from last Thursday, that's, of course, bounced back up. We're still bullish. We never did get into bearish territory on the near-term line. And we're still right around that 2.5% mark. But that's good. We need to at least be 2.5%. So it doesn't, as long as we're not below that, we're okay. Even if it's just barely there. The line moving average is kind of fluctuating up and down. We haven't really got a good trend developed yet to the upside, but again, because the intermediate line's above the 50th percentile, we got dark green shading. In fact, it's because the 80th percentile we had dark green shading, and it's also again above the market sentiment line as well. Of course, the Nasdaq's been a big driver of that, though today the intermediate line now has fallen without getting to the upper reversal zone so far, right? We're still above market sentiment. We're still in bullish territory. It's still, potentially a bullish near-term low point. The near-term line actually did fall in the bearish territory after and it was not an intermediate confirmation signal because we didn't have the intermediate line in the upper reversal zone on Thursday. But Friday, the near-term line did fall down. So now we're still in there. today. Remember, you got 2 days to go from below 40 to above 80 once you cross, and you want the momentum line to be above the near-term line on that first day that it comes out of bearish territory there. So, but I mean, we have light pink shading and yellow line again, so it's not quite the most bullish pattern there. Your Dow Jones Industrial Average is looking okay. Dark green shading and a green line. The near-term line's back into the upper reversal zone, so we're still good to go there. Getting a new high today. And then your Russell 2000, which is kind of like the NASDAQ, has been a little bit underperforming. The near intermediate line has crossed into bullish territory, so it's crossed above the 60th percentile just barely, but it's crossed above there. The near-term line never did drop at all below the intermediate line yet, so we're still kind of on the same bullish near-term run that we're on, and again, dark green shading the green line, so we're pretty good to go there. Now let's take a look at some of the other charts here. Let's take a look at the weekly chart. Again, we have a higher Hakunashi close so far. It's only 1 day into the week, but higher Hakunashi close. We have a slightly higher high. The size of the candle has dropped now below the average, or at least is flirting with dropping below the average, just a little tiny bit below that. So, again, that's a little weakness, but nothing too major yet. The NASDAQ 100 member has been showing more weakness here recently. It has a lower high, so that is a little weaker. And, of course, obvious crossover down there, and the PPO is kind of falling. So a lot more weakness on the NASDAQ 100 chart right now. Your Russell 2000, which had been weaker, it's actually got a good, strong bullish candle here this week so far. And, again, we are in the 95th percentile of the past 3 years of where... how far above the moving average, like the gap between these two lines down here is what this line's measuring. And again, you can see the size of the candle is actually smaller compared to the last little rally we had about a month or so ago. 3 green arrow charts, you can see we have 3 green arrows still across the board. Everything, including the Russell 2000. The MACD histograms are falling, but you still have 3 green arrows everywhere. Looking at the 2-line version of the chart, you're still above moving averages. You're still above both the 8 and 17 day. MACD, of course, still above its moving average. That's why the histogram is positive, and your stochastics is flirting with its moving average, but only because the moving average is so high. Right? Your NASDAQ 100 looks very similar. You're still above moving averages, even if you are flirting with the 17 or the 8 day, but you're still above the major moving averages, so you're still okay there. And of course the Russell 2000 is kind of broke out on Friday and held a lot of that breakout here today as it's above the value area on its 1-year chart. And when you look at some of the other oscillators, this is where we haven't been getting the patterns yet on the S&P, and we still don't. So your positive indicator now is dropped down below 25 with your negative down below 20. So now granted, if the positive can bounce, would be really good. But to have both of them below 25 kind of shows that we're not really strongly trending right now. And the Qs is the same way. It's even a little worse because the negative line is still easily above the 20th percentile. IWM has got a little bit better pattern. This is kind of what we'd like to see the S&P have, and we're not quite there yet. Looking at the Russell 2000, the same thing. Remember, we had gotten above 60, so we have the green box, but we haven't really solidified this, like the CCI hasn't really broken up above that 150 level. So you're not really getting clear strength there. Looking at the Ichimoku cloud, you are above the cloud. You do have a positive rate of change, and you do have a weak bullish trend. You still don't have a strong intermediate strength yet, but it is weak. It is a trend, albeit weak. So that's a good sign. Not the greatest sign, but at least it's something. And then again, we're the bandwidth is still very high. That we are not in the upper quartile of the bandwidth, and the momentum looks very, very strong up. Again, about the same momentum that we had over here, but over here you're coming up off of you're breaking out of higher lows or higher highs, and you're breaking above the Keltner channel, and we've had a lot of energy to get to this point, and the question will be now if we've expended it all just to get here. Now, granted, as the momentum declined, we still rallied. So that's that doesn't mean we have to decline if the momentum declines, the positive momentum declines there. Looking at the intraday chart, you can see the sideways action we've been getting. We did get a new high. The point of control is now way up here at the top. The new low is still over there, so you still have a nice pattern here. The Qs, I believe it's the Qs. No, it's the IWM. IWM has both lines below 30, so we still don't have a new high or a new low yet over here. Now, granted, in a couple of days, that high is going to drop down to this level, to at least today's high, because you can see that's the highest point. But it's going to take still a couple more days for that to happen, and we'll see where we'll be trading by then, by the time we actually get that move. So we'll see if we actually move up to 100 or not by the time we get to that point. But you can see the range, of this 4-week range. It's a really high 4-week range, like for Russell 2000. So, one of the higher levels. So, in other words, the rubber band's pretty stretched. This is a pretty high range here. Now, it's going to start to come down a little bit when this high comes down, but it kind of goes to show that it's going to be hard to really extend this gain when the rubber band is stretched as it is already. If you take a look at today's trading range and volume, you can see below average volume, below average range, very typical for last week in August going into Labor Day. Excuse me. The volatility also looks pretty similar. It is above 15, but still pretty low, below 90%. And your VVIX is still above 100, so we haven't quite broken down yet on the VVIX, so we can feel really comfortable about this bullish trend maintaining itself. Even if there's a little weakness here, but we're not expecting it to turn south. We're just kind of watching it go sideways for a while, kind of like we talked about last week, with the idea that hopefully it can break back out to the upside without having to turn back down. I think that's what everybody would love about the markets, if we never go back down again. But that's kind of the idea. Like right now, we could be kind of going sideways into a convergence period without necessarily a consolidation period. All right, now let's talk about what's driving this price action here today. So let's pull up the asset comparison chart. You can see how great real estate's up 16% over the past 3 months. We're really doing well. Bonds and gold really doing well again. So that you kind of picture that as a kind of a risk-off situation. Even though the dollar's down, commodities down too, but that wasn't the case today. Commodities had a really, really good day. In fact, commodities have had a really good couple of days here, but had a really good day today. Even with weakness, strength in the dollar, commodities was up 1%. Q's down 1%. Emerging markets, which is interesting because those are really commodity kind of linked. Then you can see bonds were down a little bit. Yields were up a little bit. S&P was down a little bit. The Russell 2000 actually up for most of the day. So it's really kind of a QQQ thing. And when you take a look at the sector comparison chart, and you can see again real estate doing as well as it has been, and if you take a look at just today alone, XLK, XLY both declining. Now again, if I were to go back all the way to the low of August the 5th, so starting on the 6th, there's a reason why those two declined the most, and everything else outperformed the markets, because those are the only two sectors that have been really outperforming the markets for most of this time. Financials had a really good last couple of days, and they're outpacing the markets now since the low point. But you see, everything else has been lagging the market, and those two sectors, XLK especially and XLY, have been the most. So really, what we've seen over the past few days, which really the last, from Thursday, Friday, and Friday, and then today, so starting on the 22nd, you can see those two sectors have really just come in because they've been so overbought. In the short term, on a relative basis, they've been so overbought. In fact, when you look at their relative rotation graph here, again, XLK is the only sector in the leading category. Now, everything else is starting to turn up a little bit, but that kind of goes to show it's been an XLK world. And I think I showed you before too how much Nvidia too has been the leading driver of XLK's move up to the upside here. Let's pull up the relative rotation graph on XLK, because remember, it was so low. It was the lowest it's literally ever been. It failed so far to get above the 50-day average for the relative strength chart. So that would be right here, XLK relative to SPY. You can see it's still, below moving averages, still back below the 8 and 17 day. Those are both still below the 30. So, we still have some weakness on technology, just some slight weakness, only because we had so much strength and momentum just to get to this point. And you can see the actual ETF is flirting with its 8-day moving average there. So as a result, you had a lot of stocks. At one point today, you were above 400. We finished at 389, but we were above 400 today at a high point. Let's see, this says here, 411 was our high on the number of stocks above the 50-day moving average. We had a big jump in, we had a couple, we had now 2 days in a row of 576, so relatively high levels. But when you just look at the New York Stock Exchange and the highs, we had a pretty good move here too, finishing now at right about 347 by the end of the day today. And you can see the new lows still extremely low. It's you kind of get to that extremely low and you get close to these highs, and we're seeing that again right now in the 52-week lows. So, it's a good breadth here today, but only because the breadth was so narrow to get to this point that the breadth was kind of oversold, so to speak. And now we've had a nice little move up. We were actually above 70 on the McClellan oscillator. Ended up today only at 51, but we are back above 500 on the summation index. So obviously we are trending. The question is how long this intermediate trend is going to last. The breadth has been great here recently, but it's not a broad move. I think a lot of people have been, there's a lot of people talking about how we've been broadening out. And it's like, as you saw, we haven't been broadening out. It's been an XLK move. It looks like it's a broader move because, oops, sorry, not that one. It looks like it's a broad move because of the late move and really the move off of the high point, right? So we looked at the move off of the low, but when you look off of the previous high point here, you can see like a lot of these sectors just didn't drop very much. By the time we got to the low on August 5th, they ended up not really being down very much, and XOK was down 17%. Some of these weren't down at all, and the others that were down were only down a couple percent. So XOK was just so oversold and on the bounce. Remember, it's been bouncing up the most going into Thursday. Little weakness on Thursday, Friday, and then today. But that's why it looks so broad, because these other sectors just weren't very weak. And they haven't been as strong on the rally until the past few days when, again, the relative strength trade has been a little bit overbought. And you would expect that you're probably going to start to see some decrease in momentum. You see this momentum line's already starting to turn down. So as momentum turns down, you would expect that the relative strength will have a hard time staying up and will follow suit, especially coming off again of such an extreme low point and the momentum being at such a strong high point. Like, it's very rare for XOK to get above 102. So very, very extreme. And you can see everything else, which has negative correlations with the markets, all starting to pick up. So a little bit of momentum there. Again, they have negative correlations typically with the markets there. And like, this QQQ to IWM ratio that we always pay so close attention to. You can see here that, again, it's, below its moving averages here. Let's go to a 1-year chart. That's on the weekly chart, right? So below the 8 and 17 weekly moving averages. If you look at what's going on the daily, you failed at the 50-day moving average, and then now you're back down below all these moving averages, including the 200-day, and the MACD's rolling over, and you can see it's not as strong, but it's still a positive correlation. It's been declining there a little bit, and the long-term PPO is rolling over. So, again, it's one thing to have, some relative strength in IWM coming down to the 200-day moving average. It's another thing, and really one of the ratios that I've been talking about here lately is like Amazon relative to Walmart, right? This is kind of a discretionary space, and Amazon and the staples, both retailers, but one is more discretionary and one is staples. And you can see how Amazon has just been getting hammered relative to Walmart, and the market's still kind of held up. That's why it's negative correlation, but typically it's got a positive correlation. And if you look at the long-term view of this, it's really been breaking down. You see the breakdown here below the 200-week moving average in 2022. We got back up to the 200-week moving average for the ratio chart here in the 2024, but you can see the breakdown now, and we're just continuing the breakdown. So the PPO is falling at negative levels and working its way lower, and that's typically you can see it's typically positively correlated in the long term with the markets. When Amazon outperforms Walmart, the consumer is doing good. When Walmart's outperforming Amazon, that typically means the consumer is starting to entrench a little bit, and we see that in that ratio. You also see that to a degree with Target as well, relative to Walmart. It never really did recover in 2023, not until like late in the year, beginning of 2024, and you can see it's already coming back down, well below its 200-week moving average. So it kind of goes to show that Target never really has recovered from 2022. Like other discretionary stocks had, relative again to their staple peers. All right, that brings us to our trade idea of the day, and let's take a look at Alcoa, the chart for Alcoa here. Let's pull first off into the market forecast chart. Here we go. So you can see, good looking. Oh, that's S&P. Looks just. I was going to say it looks just like the S&P because it is the S&P chart. Good looking bear tag, and then a breakout here today, continuing to build on the bear tag. The near-term line coming down to a bullish low point and bouncing back up. Remember, it takes 2 days, right? So we have day number 1, you got to 48, and the momentum line was higher there at 65. And then the second day, it got above 80, right? That's exactly what you like to see on the near-term line. So we don't have dark green shading the green line yet, but we're probably just a few days away from that happening. If you take a look at the weekly chart, obviously you saw the weakness that we've had here recently, but now you've got a green arrow, right? Your Hakinyashi close is a good strong close right around last week's high point. You can see the reversal, the strong Hakinyashi candle above the average down there. Like I said, the green arrow, so closing at least above the 10-week, but also you can see the 40-week as well. When you look at the 3 green arrow chart, you have 3 green arrows. You don't have a lot of volume. So it'd be nicer if you had some volume, but you do have the 3 green arrows. It's stronger volume than the past few days. And you can see kind of the breakout there. The gap that we had to the upside today, and we've held it for most of the day. Looking at the 2-line versions of this chart, you can see that, again, we're above the 8 and 17. They're both crossing the 30-day moving average. We're flirting with the 50. We got to cross above that. So we're not necessarily out of the woods yet here. When you look at some of these other oscillators like the DMI, you can see a nice little crossover, above 30 in the positive, still above 25 in the negative, so not quite there yet either. The RSI and the CCI are above their chart midpoints, not quite to the bullish levels we want to see, like getting above 60 yet, or above 150. They're still relatively bullish there. And then looking at the cloud, the Ichimoku cloud, we're actually still below the cloud, but we are above the green line. The green line's crossed above the blue line, and we're that close to getting a positive rate of change. And the bearish trend that we had is gone, so that's a good sign for the markets as well, or for this stock as well. You can see we are flirting with getting into the upper quartile of a pretty wide bandwidth. It's still actually outside its Keltner channels as we transition from really strongly bearish momentum that was well below the Keltner channels for quite a while to some pretty actually strong bullish momentum. So a nice little reversal. So what we decided to do here was to come out to the mid-30s delta, sell that mid-30s delta, buy 2 strikes away. So $2 away, so 36.5 to 34.5. Position size, our normal directional position size for that $500, half our normal risk, which is $1,000 on these more higher probability trades, and getting a little bit more than a 1-to-1, almost a 1.5-to-1 reward to risk ratio. But we're okay with that because the chart's not the most bullish. It's bullish enough, but not the most bullish. So I got a lot of flexibility for timing here, and I'm again I've got a kind of a smaller reward to risk ratio, which helps limit my downside if it doesn't work out the way that we expect it will. All right, well, that does it for today. You've heard from me now. Now I want to hear from you. Use that link popping out in the top right corner of your screen. That takes you to our Market Outlook forum. Open up any new thread with any questions or comments you have. Reply to anybody else's thread, and let's keep this conversation going in between videos. Again, thank you very much for watching. Remember to subscribe to our YouTube channel. Hit that thumbs up icon, comment on the video. Join us at marketscholars.com for free. Follow and like me on Twitter and Facebook as well. Have a great rest of your Monday night, everybody, and we'll see you all tomorrow.